good afternoon. I know we are running like awfully late. That means you don't get lunch. So the earlier you come in, the quicker you get lunch. Session number 2 is how do we bank the unbanked in India. We have assembled a very impressive set of folks from the industry, from the corporate as well as from the government. And you'll be privileged to have Professor Dean Chakrabarty, Rajesh Chakrabarty, chairing the panel, and I'll hand it over to Rajesh to take it over. Thank you.
Thank you, Ram. It's a real privilege to moderate this session with several distinguished speakers. May I request you to settle down quickly, please, so that we can start. As Ram mentioned, we are quite a bit behind on time, so we need to play catch up. So what I'm going to do is I'm going to give a very brief introduction to the speakers and then request the speakers to speak for about 8 minutes, and then we move on to a conversation, if that's okay with everyone.
If I do it in 5 minutes,
Okay. So we are privileged to have with us Professor M.V. Rajiv Gowda. He's a member of Rajya Sabha and from Karnataka. We all know him also as a professor and the direct chairperson of the Center for Public Policy at IIM Bangalore. And Professor Gowda has also founded the Resurgent India Trust, has mentored startup companies and works on youth empowerment, among other areas of his interest. He's an avid quizzer and is the founder secretary of the Karnataka Quiz Association in 1983 and the national runner-up on BBC TV's Mastermind India in 2002. I have with me here Mr. Nipun Mehrotra, who is a business leader in the IT industry, working in India and the Asia Pacific for over 35 years, 26 of them with IBM. And recently, post-IBM, has been working on societal areas like women's and child health and development, early childhood education, and agriculture to support the acceleration of India's progress in Sustainable Development Goals, SDGs. He's closely working with some states like Karnataka and foundations like Gates Foundation and Carnegie. Mr. Anand Pratap Singh, senior economist, Punjab National Bank. His areas of expertise includes MSME clusters and agriculture. So he has had significant experience in the priority sector finance, MSME development, agricultural finance department, also in prime financial inclusion projects of the Ministry of Finance, Government of India, and the World Bank, besides involvement, monitoring of priority sector and agricultural financing, and has also implemented the lead bank scheme in various districts in Western UP and NCR region. Mr. Krishan Dharmarajan heads the Center for Digital Financial Inclusion, CDFI, in India as its executive director. In just over 4 years, Mr. Krishan has built CDFI from scratch to an organization that now drives multiple impactful innovations. CDFI employs technology to improve design, drive faster rollout, and effectively track large G2P programs. Finally, my colleague, Professor Dipanshu Mohan, is an assistant professor and director, Center for New Economic Studies at OP Jindal Global University. He's also a visiting professor to the Department of Economics at Carleton University, Ottawa, Canada. His research cuts across disciplines of development economics, economic history, and institutional economics. So welcome to all the panelists. Thank you for being with us today. And may I pass on the microphone to Professor Gowda for his opening remarks.
Thank you, Professor Chakrabarty, and good afternoon, one and all. This is about as important a topic that you can get when you think about reaching this larger goal. Because in the first session also, one of the questions that was raised at the very end was about the quality of that $5 trillion economy that we're aspiring for. And when we say quality, we also mean how inclusive is it? How, are different segments of the population also represented? Are they also stakeholders in that growth? Or are they going to be left behind? Are you going to have to deal with them through subsidies and handouts because only one section of the country is moving forward? If you are interested in this topic, there seems to be a mega conference on banking the unbanked and financial inclusion going on somewhere else on the same Habitat campus, just as an aside. I don't want to get any of you leaving this session or any other. But the basic point is the quest for banking the unbanked has a long history. And since I'm the first speaker, I'll give you a little bit of perspective on that. See, you've always had a large section of India's population that has not had access to formal sources of credit or savings or insurance or even payment mechanisms. See, if you were to think about why one needs banking or banking services in some ways. And historically, there have been money lenders, traders, village headmen, people like that, who've been part of the informal lending networks, who've come in who have a very deep connect, social connect with especially rural India, and have been able to fulfill that role of providing some of these services. But they come at a very, very high cost. And so the quest has been for formalization. How can we take a formal, transparent, enforceable set of institutions and make them accessible to every citizen of this country so that their costs of participation in the larger economy, in terms of survival, in terms of growth, in terms of thriving, those are actually reduced. And this has been a long quest. You had cooperative banking movements even before independence. You had the banking system, private banks and public sector banks that emerged after independence. We had the first major move in the direction of banking the unbanked, you could say, was bank nationalization in the late 60s, when the thrust was that the major private sector banks are not reaching out to the poor, and therefore let the government take them over and then make sure that they introduce priority sector and other lending mechanisms which ensure inclusion. There have been other experiments after that. There was a famous concept called a loan mela in the 1980s and 90s, I think. Mr. Pujari from my state was the pioneer of that. And, while we laugh at it, the basic spirit behind that was, if the bank isn't, reaching out and including people, let's go out and, share the resources. And some districts, the repayment rate was quite spectacular. Now, in recent times, there's been a microfinance revolution, and that has really come a long way in terms of reaching the bottom of the pyramid, as it were, and ensuring that they have access to a variety of these services at a much higher cost. The interest rates would be much higher than what you and I might access in a public sector bank, but much lower than what they access from informal lending sources. So the MFI intervention was a major step towards ensuring banking for the unbanked. In parallel, the UPA government had worked on getting bank branches to every habitation of 2,000 and more. And Prime Minister Modi has taken it forward with the Jan Dhan account concept, where every individual now has a bank. In between, there was also the introduction of something called the banking correspondent, a person who would take banking to the poor, and in a mobile and accessible way. Along with this, the RBI has become a little more liberal in granting licenses to different types of banks, including payments banks and small finance banks, etc. But in the process, the post office, which is a fairly trusted entity across the country and has its own network, also has been able to get into this system. But going forward, when you think about where is this all moving, we need to actually think about some of the others who are on the panel here, the tech giants. Banking need not be serviced, the banking needs need not be serviced only by the traditional banks. They can be serviced today by telecom companies, by payments players, by anyone else who has an interaction with, with the poor in different ways. And so there is now the concept of peer-to-peer. There's the concept of, wallets, e-wallets. I mean, there are new, and some of this you all probably actually utilize. I myself am already too old for, I don't have a Paytm wallet or something like that. I'm still with credit cards and things of that sort. But talking about credit cards, we also have something called the Kisan credit card, which has come in and has been widely used as a way to help farmers access, access the formal banking system as well. So when you think about where we are, we're probably poised for very, very significant disruption. We are hoping that technology will come and save us the way the mobile phone saved us. When I was much younger, it would take 2 years to get a landline telephone connection. All right? So that used to be the reality of our lives. And we would, to reach somebody, maybe a child in a college hostel in Sonepat, we would have to go to we have to make a trunk call, or, there was a waiting period. It was a very, very different life. But the mobile phone transformed us from a nation with very low teleconnectivity to one where we now have probably 1 billion unique connections, maybe a little less than that. So in this context, you now have also maybe 80% of that. My numbers are somewhere, but I don't remember every one of them. Who actually have phones with true, access to the internet and other facilities that will enable them to use this mobile platform for a variety of other services. So now the time is ripe. Many other, foundational pillars are in place, whether it may be the Aadhaar program, which gives unique IDs, so which will help with KYC, internet access itself, which used to be one of the big, what we would call the gaps in terms of digital divides. Now people have access to the internet. So all these things are coming in, the building blocks are there. Now the time is ripe for fintech to disrupt this market and find a way to provide access to the larger concept of banking. But when I say banking, I'm not just talking about depositing savings and borrowing money. I'm also talking about financial risk management, whether it be on the investment side. How do you save? How do you earn? Or the other way, how do you purchase insurance to cope with health, life, and other challenges? So maybe I should just stop here. I'm just sort of laying out the big picture. This is something, many forces are converging, and whether they are activists and social entrepreneurs, working at the bottom of the pyramid, fintech entrepreneurs trying to come up with new solutions, governments which are more supportive and eager to ensure that inclusion happens, because only if inclusion happens will we give everyone a chance to be part of the growth story. And that can actually make a huge difference to people's aspirations, to social cohesion, which can otherwise be very disruptive in an economy where inequality has been growing very, very rapidly. And then one technology, one platform will lead to many more opportunities and possibly ultimately result in less of a burden on the national exchequer, or in terms of pensions, insurance, numerous other interventions, the social safety net that currently has to be provided only by by governments. So overall, financial inclusion through banking, in a much broader definition of banking, is, I think, the way to go, and we're eagerly looking forward to some dramatic transformations in the years ahead.
Thank you, Professor Gowda. May I request Mr. Mehrotra to follow?
Thank you. Thank you. And this is Don. All right, good. Thank you. And I think Professor Gowda gave a wonderful summarized view of what has happened in the banking industry for the last 20, 30 years. And I think set the foundation as to what we could be doing going forward. When I think of financial inclusion, and some of us, I'm sure many of you students here must be thinking about why this topic, right? You're so used to the fact that you use your wallets to order Swiggy, to order an Uber or an Ola, that the fact that if you didn't have access to those wallets, if you didn't have access to some of those things, how would you function, right? These things might be boggling you. But the fact is that a large part of the country actually does not have access to it. So I would say that financial inclusion, and I think we need to spread the topic a little bit. I mean, my first question to Professor Ram when he called me up and asked me to be on the panel was, why banking? Is banks part of the problem or part of the solution, right? And the answer is both. But financial inclusion is the way we should be thinking about it, and not just banking for the unbanked. Now, financial inclusion is, by the way, not just an India-wide problem, right? You'll be surprised that as many as 20 million Americans are unbanked, and as many as 60 to 70 million Americans are underbanked, right? So it is a global problem, but of course in India we are talking about huge numbers. We're talking about 300, 400 million Indians who are either unbanked or underbanked, which means they might have access to a savings bank account, which means they now have access to some kind of financial instrument, but they have no savings. So therefore, that account doesn't get used, right? The fact that in spite of so many years and so many banking institutions and so many formal institutions, what's the percentage of Indians who get a loan from a formal institution? Anyone wants to hazard that number? Anyone wants to take a guess? It is 6%, which means only 6% of Indians have ever managed to take a loan from a financial institution, while 80% of Indians have actually borrowed money at some point of time or the other. Now, the balance have taken from friends and family, or from the informal circuit, or from loan sharks, or from all kinds of private institutions or informal institutions, and they end up paying significant amount of interest rates on that. So we need to think very, very dramatically as to how are we going to include 300, 400, 500 million Indians into a world where they are financially inclusive. And let me define in my head what I mean by financial inclusion. And there are 3 or 4 relevant portions to the description, to the definition, and hopefully we'll get some time through the panel to talk about each one of them. So as I look at financial inclusion, it is creating an enabling environment to allow individuals or micro or small or medium-sized enterprises to access, and access is a very important word, to access suitable products and services that they can understand. Suitable products is very critical, and Professor Gowda mentioned microfinance. I will come to that in a moment. And able to understand those products and services is probably the most vital element, because a large number of Indians use loans when they should be using insurance, right? Or they should be using a different financial instrument for savings, etc. So creating an environment where we can access suitable products that we can understand, right? In order that we can, A, protect ourselves, insure ourselves from health, from weather gods failing us, agriculture crop failing us, etc., to protect ourselves, to sustain our livelihood, and then to grow our wealth, or to become, or to kind of build a better future for us and our families, right? So that, in some ways, is a broader definition of financial inclusion. And each of those elements, as I said, needs a debate on itself, because they're very critical. Access, I think to some extent we have solved that in some manner. Yes, we have got 80% of Indians now having access to a bank account, right? We need to think about different means of allowing them access. We need to think about, by the way, telecom inclusion is far more widespread in India today than financial inclusion. Do you agree with that? A person will not let his telephone go away from him. He'll make sure that he tops up that 50 rupees or 75 rupees that he needs at the end of the month to make sure that the connection remains active, right? So telecom inclusion being so high, we should think about, and I think Professor Gowda mentioned that as well, how do we use mobile operators, how do we use technology to try and include some of the financial inclusive products. Like, for example, as a part of the 50 rupees that he does for top up, can 1 rupee go towards insurance, as an example, right? How do we think innovatively of improving access further and further? The second part is the appropriate products and services. Isn't it shameful that the wealthiest Indians pay the lowest interest rates and the poorest Indians pay 3x, 5x, 10x of what we would pay, right? So that has to be inverted. You have to look for other ways in which you raise money. Microinsurance, microfinance is a way out, but microfinance, a source of microfinance, they're not allowed to raise deposits. You and I cannot put deposits into them. So each of those topics, etc., is something that we need to focus on. And finally, financial literacy, right? Making sure that people are using the right product for the right service that they're looking for, right? So let me stop there. Professor Chakrabarty, this is an interesting topic. We'll probably get down to the actions in terms of what we can be doing later on.
Thank you, sir. May I now invite really the only banker on the panel, Mr. Anand Pratap Singh.
Thank you, Mr. Chakravarti. Just now, Mr. Malhotra talked about the vulnerability of the people who are to be covered under the financial inclusion. Why they are vulnerable? Because they cannot access to the formal finance through banks, etc., or financial institutions. They don't have a credit history. They don't have much collateral to offer. So their credit risk rating, etc., goes high, and they are charged higher rate of interest. Formal finance goes beyond their reach. So ways are to be devised to include them into the financial sector, or how can they avail finance from the financial institutions. That is one. Now second point is how can we how the financial inclusion thing is linked to the Indian economy, or as they are saying, the building a $5 trillion Indian economy. How do we link to it? Now, first thing is the vulnerable sections, if they are provided some kind of avenues of savings, they can invest them into some productive assets, etc. So once they have invested, I think they can grow their livelihoods or diversify their livelihoods. Second is the major chunk of the vulnerable sections lie with the rural areas, rural population of India. So around 50% of the labor, casual labor people, and 30% of say cultivators, mostly small and marginal. So they are, I think, they need to be financially included. So once we strengthen the rural sector, we make the economy more resilient to the global shocks or to any other shocks that otherwise the other sectors will not be able to withstand. Next is what are we going to do and how the banking system is doing for the financial inclusion implementation. So right now we have three areas, basic areas through which financial inclusion is being implemented in banking. One is your branch expansion, but branch expansion is a costly proposition for the banks because it involves brick and mortar offices or branches and staff, and it becomes a costly proposition. So cover a large population through this medium is not possible. Second is through whatever has been done, some progress has been done, but kind of not much further progress can be made through this mode. Second is the expansion of financial inclusion through the business correspondents. They are a kind of retail agents. So how we are working in the banks is like we have a concept of corporate VC. Corporate VC is a kind of company or something through which, through that entity, the business correspondents are handled actually. We directly don't deal with the business correspondents, but we deal with the business correspondents through the corporate business correspondents. That is the corporate VC. Now, now how? Now there are areas in which, through this model, in which banks have done well, and there are areas, there are gaps where still much is to be desired. There are challenges. One is the Pradhan Mantri Jindal Yojana concept. We call it BSBD accounts. Under the concept, the BSBD accounts are open. These are basically zero balance accounts which are open. But the major lacuna here is about 50% of these accounts are dormant. 50% of these accounts are dormant at present. Dormant means they are inactive, and the people are actually not using the accounts. So one way of getting across this problem is to back up your financial inclusion program with a strong financial literacy program, which is lacking at present, so that people start using these accounts. Second is there is a kind of rural-urban divide. When we see the data, if I can quote some data, vis-a-vis 2010, there were around 34,000 BC outlets, 2010. And now, 2019, it is 541. This is the rural I am talking. And in urban, 2010, there were 447 outlets, BC outlets, business correspondent outlets. And now there are 4,47,000. So, increase is definitely more in the urban setup, urban locations. But urban locations have become saturated. Why this is so? Because VCs, they want to work more in the urban location rather than in the rural location. The reason for this is the scale of operation for VCs is higher in urban locations and lower in the rural location. So, while offering themselves for this kind of thing, this kind of job, there is a lack of supply of VCs in the rural areas. So how we can get away from this problem, or how we can counter this thing? One way is that can government subsidize the commission payment of the rural VCs? Or another way is, can we cross-subsidize rural VCs with the commission of urban VCs? Because urban VCs, urban locations are more or less saturated right now. So this is one way. Another problem that is being encountered is the OD facility. Against the Jandhan account, PMJDY accounts, there is a facility of OD facility to be provided by the banks. Earlier the limit was 5,000, now they have raised it to 10,000. So, it is not actually picking up. If I can again quote some figures, the OD facilities in 2010 was 0.2 million, and in 2019 it is 6 million, but not much progress if you see the number of accounts, BSBD accounts opened, compare it with this, not minuscule progress and only has taken place. Why this is so? Because there is a condition for giving the OD to the account holders of BSBD accounts. The condition is that account should run satisfactorily for 6 months. So how do we measure it? It should be around 1 transaction in a month should be done. But because of various kind of barriers, people are not able to do the transactions, particularly in the rural areas. So they become bereft of this facility. So I think this some relaxations can be permitted in this area, so that this OD facility thing can take off. Another area where some gap remains is the KCC, Kisan Credit Cards. It was 24 million in 2010 and now it is 49 million. So it is almost double, but still the saturation has to take place. Around 20 to 30%, I think, Kisan accounts, farmer accounts are yet to get the KCCs, because either they are not interested or they have not been approached. Most of these farmers are small and marginal. So we'll continue when the next round comes.
Yeah. Thank you, sir. May I request Mr. Krishnan Dharmarajan?
Hello, it's audible. Various aspects of the problem have been laid out by the speakers before me. So let me start somewhere so that we can look at parts of the problem. One is, okay, over the last 4 or 5 years, bringing the unbanked into the formal financial sector, the first step has been taken very well by the government. Okay? If you see, they set a target that every household will have a bank account. And today we have the coverage across the country. Every village, every household has a bank account, correct? So that's the first step a person takes or a household takes to join the formal financial mainstream. Why they should join, Professor Gowda explained earlier, because that's the only way you can get some, probably credit and stuff at reasonable rates. You can start linking up with the formal sector. That part happened. But first thing we have to note there, it's that it's only an account every household. It's not an account every individual. So most of the time, it's in the household, it's under the control of the male member. So half the section of the population is a gender. The women still are not financially empowered. There's a whole gender dimension to it. They work hard. They also produce. In fact, more than 50% of the farmers today are women. They're not men. So farming also is a gender-specific profession today, and they don't have any access. So getting the women also banked is one part of the problem which has to be taken forward. There are gender-specific government schemes today which insist that the account should be opened in the name of the woman, so that that part of it also gets some money and it can start. So that is just to give you that dimension of the problem. So while we have achieved 10% coverage in bank accounts, we still have not, we have achieved at the household level and not at the individual level. We need to look at that. Second, when people start getting to the financial mainstream, the problem of the dormancy of the bank accounts are not used. It's quite obvious because the target was, the way the banks operated, there was a target, there's one incentive to open the accounts. There is no campaign to see that the accounts are used. So the account gets opened, the numbers are, everybody hits those numbers. We have done the fastest rollout across the world, and we have 100% coverage, and they stop at that. But an account is useful only so long as, some money is there and transactions are happening. And that is where we need to now move into the next part of the problem. How do you have a person engaged with the bank account? In both these things, superb work has been done in the country in terms of the infrastructure. One, how did so many accounts get opened? Because we have an identity scheme in this country, which is not there in many parts of the developing world. Every individual has an Aadhaar. So that enabled rapid opening of bank accounts at very low cost. So we did it with this technology innovation, we did it at a very low cost. So we were able to achieve that. The second level, to make people engage with these bank accounts, there also we have an amazing innovation infrastructure in our country, which is the interoperable banking payment system. Today, from any bank to any bank, you can make payments at zero cost. I mean, in the world, there are very few countries which have achieved this. We have so many banks, all of them you're able to do bank-to-bank transaction from your simple mobile at a zero cost. Okay, this has been achieved again. Now, how do you leverage this interbank payments operational infrastructure to have all these millions start transacting on their bank accounts? You have done the first step, you have taken and brought them to the financial mainstream. So how do you start making them transact on it? Because if you don't do that, they will slip back. It is only a formality that are included. Otherwise, they are still excluded. So you have to have them transact regularly on those bank accounts. And as they transact, then you start creating interesting products for them. So it is step 1, step 2, and step 3. You can't create a product for him unless he transacts. You can't create an OD product for him unless you know what he's doing in the bank account. You can't lend to a farmer unless you know what the farmer is earning today. So you have to make him transact. If it doesn't happen, he doesn't go into the stage 3, and then you don't really improve his income. So today, the step 2 and step 3 is where a lot of struggle is going on, correct? You take something like a debit card. Every Jindal account is supposed to have a debit card, right? But when we went and did our field research, we find that most of these small bank accounts, they really don't have the card. So when we did among farmers, we found that only 70% of the farmers where the accounts had been opened had a debit card. In other areas, when you looked at other segments of the population, the similar numbers. So what has actually happened? Have the debit cards been issued and not reached? Or have they reached and people really don't know what to do with them? Some people have lost their pins. So this is the first important transaction. You put money, you want to take it out. Simplest thing, let us forget the credit. You put money, you want to take it out. Have you enabled them to do that? So let us start using these simple mechanisms that are there to withdraw the money. Then bank-to-bank transactions. Today they are free bank-to-bank, correct? Now, how do you make them do the transactions unless they have the debit card? So even to start your mobile-based payment mechanisms, the debit card is the KYC today which is used. So to get the debit card and its usage going is important. And there the question of awareness and financial literacy becomes very important. Because what we find is that when we did a study among the farmers, only about 70% of them had a debit card. And even amongst them, only 60% ever used it at an ATM. So 40% have not even used, so they don't even know what to do with the debit card, correct? It's only 60% you're using, and only 11% use them at a POS machine. So you have to start making them use this. They have to start getting familiar with the banking system. Why should we do this? Why not just, because unless they transact, you can't make them start giving them credit and start extending stuff to them. Unless they build a financial history. Unless that financial history is tied to their livelihoods. I need to know if there's a person having 3 cows and he is selling milk, how much of milk does he sell? How much does he earn every day? That should go through the banking channels. And then we should be able to create an interesting product for him so that he gets onto the financial mainstream. This part, a whole lot of hard work is required there. And a whole lot of technology is required there. And not just the hi-fi technology which they talk about, but really low-cost technology. Low-cost technology which will create products in a viable manner for small value transactions. So these farmers are totally earning 10,000 rupees a month, let's say 5,000 rupees a month. How do you make them transact at a low cost, generate transactions, and create products for them and give them? So this is the challenge that the financial inclusion today faces, where technology has to be very key to make all this happen at a low cost and create products which are useful for them. So there has to be tailor-made products. The very interesting things which have happened, I'll just take another 30 seconds. See, some very good things the government has done. You see, in the last thing, we said there can be a health insurance product for the poor. So we said we'll cover 10 crore poor households at a very nominal kind of an insurance product the government rolled out. The first time somebody had thought, why don't we create a product for them? So again, there's a Pension Yojana. Pension Yojana is something that is suitable for him. So you have to start creating products which they are able to relate to with their incomes. Let us start doing that. No, unfortunately, this is happening by the government at a big level. This should happen for every bank. Every bank should start looking at interesting products which will tie in with the crop cycles of the farmer. When does he harvest? When does he do the crop loans? When we did a field study with farmers, what we found is about 37% of the farmers' income is used for buying farm inputs. 27% is used for buying crop inputs. 11% is used for buying crop loans. 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 11% is used for buy 37%. Only 22% goes on food, 37% farm inputs. And for these farm inputs, 90% plus people, they go to the money lender. There is nobody to lend him money for doing that. So because you're not studied what he is doing, you just have one product and say, hey, this is the rate of interest, you come and take it. You have to tie it. When does he go and sow? There is a Rabi season, there is a Kharif season. At this point, he is going in. These are the things he needs. Why don't we build a product for that? Do a little bit of hard work. I mean, it doesn't mind. All the brains in this world can create an interesting product like that. This is one example. Second example, I'll tell you. We did a study on migrant labor in large cities. Today, 45 crore people in this country are migrants. 45 crores. Out of that, a significant portion are rural to urban economic migrants. Okay? These guys are actually earning money. Their families are back home. Back home, 99% of the households have bank accounts. All of them have. But they don't earn anything. The guy who has come to the city and is earning the money, only two-thirds of them have a bank account. One-third doesn't have. So the person who is earning, he has no bank account. He has to send money back home. Those guys have it. It's so ridiculous because you have not bothered to look at this segment and say, urban migrants are a key segment. What are their needs? They have to send money home every day. How do I enable him to do it easily? Today, 48% of them in this age of Jindal and Bheem and Aadhaar and all that, 48% of them send money home through friends and relatives. They don't use any of these channels. And what is the opportunity we are looking at? Our most conservative estimate tells us 64,000 crores is the remittance market in the country, just the most conservative estimate of these guys sending money home. Nobody is bothered to create anything for them. Okay, so financial inclusion will happen when you create interesting products, when you create interesting value propositions for those people. Otherwise, you will just create empty bank accounts, which will never be functional, which will remain dormant, because it doesn't make any rational sense for a migrant today to open a bank account, because there is no way he's going to send money home. And let us tell you, people talk about postals and post offices are great and they are great ways to relate. When we did a study on the urban migrant labor, very small proportion of them knew where the post office was. Probably 6% of them even knew where the location is. He is working in construction, nobody even knows. Banks, they see. They all rely more on banks because banks, the big posters are there. So simple things. Why don't you let people know where the post office is? How do they send money home using a post office? It's not done. Okay, so it is important to start looking at the actual needs of the people whom we call bottom of the pyramid. It is important to start looking at their needs, create products for them, which is useful, so that they start linking up. Somebody said in the earlier session that, this TDS, which is now being levied on cash withdrawals, it's a bad news and people are talking about it. But it could be a very good news for this sector, because for once, if there are construction companies, textile companies, large industries, when they employ migrant youth or migrant labor, they will actually now be forced to pay them through the bank account. Because if they do a cash withdrawal and pay the salaries, then that cannot happen, because they have to pay, the TDS will be there. So they'll be forced to open bank accounts. Let these bank accounts be opened with interesting products by which they can just send money home. Let us talk about other things. He came here all the ways because his family is back there. He's a driver here. He wants to send money back to Bihar or back to Odisha, wherever. Create such interesting products. Create it in local languages. Create it in smartphones. About 20% of them have smartphones. Why not all those 20% start using it just for sending? Even that simple thing can create a huge boost for the usage of these bank accounts and create so much of velocity for money in the economy. We need to start thinking simple, and let us understand each one of these products will have a lot of innovation in it. There will be a lot of high technology in it. It's not that it's going to be low tech. It's going to be high tech, it's going to be low cost, and it's going to be a lot of innovation. And it's the youth like this who is going to design these products and take it to the people. Thank you.
Followed up with education.
With education.
Thank you. Okay.
Good afternoon, everyone. And I think it's a fascinating couple of hours of discussion. I've been listening to each of the speakers articulate some very pertinent points on what's happening. What I tend to do generally as part of my work is last 3.5 years, I've been working a lot on markets in different cities and just understand how these markets function. Okay, so I'm probably going to give you a way of what you would call as a street dog's perspective Okay, with all that I've been seeing, I think there has to be, and the previous panelists have pointed out some very important points on what needs to be changed and what are the things that the government has been trying to do and what banks and financial institutions are doing. One of the things, and this is something which is coming out from where we are currently, is on what are our geographical or what we in academic jargon use the word spatial conditions are. And perhaps if you're more aware about those, it's easier to look and start looking at solutions from those perspectives. So I'll offer you a very framework-led perspective on what financing can be done. This would start by perhaps looking at one of the images that you have. I don't know if you would recognize this, but this is from one of the largest flower markets in Asia, which is next to the Hooghly River or Havra Bridge in Calcutta. All right. In this market, which is one of the kind of most chaotic markets that you can see, this is active almost 24 hours a day, and your ability to even meet and talk to someone would require some effort in trying to just understand what's happening. So in that, I came across this woman, Sahana Bibi. She is a flower vendor, and I just want to quickly give you an idea about what Sahana does. Sahana is a 45-year-old woman, resides in the suburban parts of Calcutta. She wakes up around 4 a.m. every morning to buy fresh flowers from Kolaghat and Ranaghat for her flower shop in Mulighat Bazaar. It is one of the busiest markets in India and perhaps South Asia. Sahana has been working in this area for the last 35 years, since she was a child helping her parents in procuring and selling flowers for temple offerings then. Most of her usual business clientele who buy flowers do so for temple offerings, and she gets most of her orders to a mobile phone. Okay? Without any formal education, Sahana is an entrepreneur with great business clarity, explaining in detail about the diversity of flower baskets sold in Mulighat and some of the challenges faced by her selling flowers in an extremely competitive market space. What Sahana does, and if you ask her a question about what she's been doing for her business to expand, as an entrepreneur, her envision is to increase her profit margin, which is less than 6 to 10% on a daily basis on the flowers that she sells. To realize this goal, she expresses greater state support in developing local credit channels. And this is basically a woman telling you about what are the kind of things that they are looking at, right? Receiving more of credits via secured loan, and perhaps get some kind of infrastructural assistance in putting up a shop which makes probably access to power and internet more easily. She says, and I quote, "Today technology is benefiting everyone. I take most of my orders now over calls, and many of my customers keep asking me to set up a shop and start taking orders online. I wish I had the resources and the knowledge to do so." She feels that this is good for us for the perspective of what it is doing for women in the region. If we get more technological access, and more importantly in areas of credit channels, we can probably transform this. So this is Sahana's story. Of course, there's a lot that can be said about her. We have 10 kilometers from there, another person, Mr. Oishik Das. He's a sculptor in one of the markets there, which is very popular when you have Durga Puja, when you're getting Durga idols there. Oishik's story is very similar. And Shabir, which is the third person in the story, is a vendor at Delhi Hat, which I think most of you would be familiar in the markets in South Delhi. Shabir is a Kashmiri vendor who has been navigating or floating between Kashmir and Delhi to be able to sell his products primarily in areas of Pashmina shawls. And he has been making the same argument about what was the early panels point out on remittances and having accessibility of financial resources to be able to take that over. So what is that we're seeing right now? And I think it's something which is very important to understand. The country is perhaps in transitions of three major groups, right? There is the urban group where we have access of lesser finance, and I'm using carefully the word finance because you may have a bank, it may not be operational, you may be underbanked, but you don't have enough information on taking out a credit loan. So in the urban space, I'll have to take a couple of minutes, sir, please. is you'd have to look at the domestic workers. Now, if you would remember demonetization when it happened, primarily the worst affected were those who you were paying on a month-to-month basis in cash, right? You couldn't probably pay the domestic workers. Most of them are women, right, in spaces. And they have enough difficulty already to be able to finance these operations. So that's one of the groups. The other group which has been talked about already is your floating groups. We call them floating because they're moving from one space to the other constantly. Some of them working in businesses and markets. You can see the street markets happening in Delhi. And they are the rapid churning out of population groups within the state. Earlier, the migration trends were interstate. Now it's turning more intrastate. So with higher cost of rental, it's becoming very difficult for people to stay. So they prefer moving. The third is the rural groups. Now that's the most which is talked about when you have a discussion on unbanking. Now, in another discussion, probably you need to talk about farmers, but I think we often get the picture wrong on what the farming community is really looking for. The issue primarily that seems to come out from is the fact that a lot of them have access to bank accounts. They also have, in fact, more access to mobile phones and data now. And once you have access to data and mobile phones, you can look at the percentages to get a certain perspective. But what you're really finding it difficult is to amalgamate the kind of reach that telecommunications has had as against to what finance has had. And this is laid out structurally in the kind of problems that we are currently facing. I feel there are 4 main issues that you have to have a discussion on, I think in the next day and a half. One of which is to be on the operational and functional autonomy of financial institutions. Banks, unless and until they're allowed to get enough autonomy from the state and the government institutions, cannot have access to the people the way you want. You have to almost think like an LIC agent, and LIC is a great grand success story if you really look at how it's reached out to semi-urban and rural spaces in some way or the other. And if you want to reach out to people, the way you have to do is start looking at your clientele, which is the clientele like Sahana, Oishik, and Shabir. They are in much more in numbers as against anyone else. The second is to be able to look at competitive finance. You already have one bank which is present in a space, and the next bank, let's say, is available in a distance of 10 kilometers. Now, unless you don't have competitive structures, self-help groups did that extensively in a lot of rural communities. The space to do that is look at what product you're offering. Again, a discussion has been happening on that. But I think affordable housing, which is the area that we are kind of gradually moving towards, is going to enable a lot more people to finance this. But how do you actually look at it? And I think cooperative financing has been working extensively well. We need to have more information and studies to see what is working where, to what extent, and try enabling that. We will remain a small scale and medium scale enterprise unless and until we learn the benefits of scaling. And perhaps, unfortunately, we don't look at scaling up for most of the time. That's why we stay in a small scale space. The last point, which is on rural communities, I think this is something which I've been arguing extensively in what I've been kind of trying to write about, is you need to have something which China did extensively well in its rural markets, was to have special purpose vehicles to let them drive credit as the way. Credit would fuel growth over a period of time, and if you allow that to happen in the autonomy that institutions need, that may help. Now, a lot of people have made the point, and this is very critical, on what banks can do also not only in terms of getting you to open an account or provide credit, but also act as knowledge consultants. You see how the World Bank functions now. World Bank has learned its lessons extensively by operating in a lot of countries, and has learned that the best it can do is give you the information on what works, what doesn't work, give you a rich data pools of knowledge, and help you make a more prudent decision. Right? It's not for a bank to let you, okay, you come and just open an account. That's one part of the story. The other is what kind of financing options can really work. I hope we can have a more broader discussion on this. I'll end there. Yeah.
Thank you, Dipanshu. Great points. Thanks to the entire panel for really illuminating thoughts here. As always, and I must say that Ram has become more menacing every minute of the last, ever since we got on stage. So we have a hard deadline to close this in 20 minutes, Ram? Yeah. Thank you.